Okay. Hi, Sizwe.
Hey, how are you?
Yeah, thank you for joining. Quickly, just you can rename your title, yeah, your name and the name of your company.
Cool. I'm just trying to see where to do that.
Yeah. Once you hover your mouse around it, you see the three dots menu thing.
Okay, I'm looking for it.
Yeah, over your mouse around your name or your profile.
Okay.
Yeah, you see the blue three dots.
Where is my name? Yeah,
wait, let me get it. I'll do it for you.
Okay. Okay, thank you. Yeah, I cannot see myself.
Yeah.
Thank you.
That's good. So we're starting now.
Yeah, thanks everyone for joining. We're just giving a couple of seconds for people to come into the room and fill in. We'll be starting shortly. Yeah, please, if you have any questions, please feel free to drop them in the chat or drop them in the Q&A, and we'll respond to that after. We'll have about 30 minutes, to do Q&A at the end of the session.
Okay. So, yeah, welcome everyone. I guess we can start right now. Thank you all for joining us today to talk about insurance, the distribution, and especially talking about insurance from the perspective of a kind of neglected demographic, the millennials and the Gen Z. We have our speakers here, Sizwe from Pineapple Insurance, Eunice Maina from Billsmart, Wairumu from Micro Insurance Company, and Henry Mascot, the CEO of Curacel. And also Lamide from Consonants, is a partner of Consonants. He will be handling the session with us. Just before I allow Lamide to speak, I would like to talk to you about Curacel, just 1 minute. Yeah, at Curacel, we are happy hosting this event because it's directly influenced our mission. Our mission is very simple, quite so straightforward, to drive insurance inclusion in Africa, in emerging markets, starting with Africa. And we've been able to do so with our products and our solutions in the markets. But we realized that a lot of the insurance companies we're working with are not really taking this product or their solutions to this group of this set of people, the millennials and the Gen Zs. So we said, how can we make that happen? That's why we're here. I would like to talk about consonants, then we'll play a video about one of our products, the Curacao Advance. So Lamide, please.
Okay, fantastic. Thanks so much, Samson. Thanks everyone for joining us on this beautiful Saturday. I'm not sure where you are. Good afternoon, good morning, and good midday, right? So first of all, Consonants Investments, we are a VC focused on sub-Saharan Africa. We launched in 2018, and we've made about 40 investments since then. We focus on tech and tech-enabled investments, and one of our core thesis is really investing in infrastructure, pillars of different markets and industries. We're happy to be proud partners of Curacel and many other companies across the continent, and even some in the diaspora as well. So thanks for joining us. And now we're going to play a video from Curacel.
Remember that time you submitted claims to your HMOs and you waited endlessly for them to pay you? We are sure you remember, and this happens almost every month. While you're not being paid as quickly as you'd want for your submitted claims, your expenses, overhead, and other costs keep piling up. We feel your pain, and as your partners, we have found a way to alleviate some of these problems for you. Welcome to Curacao Advance, the faster, simpler, more secure way to access funding for your healthcare business. Signing up is easy as ABC. Step 1, visit curacel.co/advance. Step 2, fill the Curacao Advance form with the information required and submit it. We will securely store your details for when you request an advance. Step 3, request your advance. This is the fun part. Submit your claims and access up to 70% of the amount of the claim submitted in the month. And in 24 hours, you'll receive the money in your registered bank account. It's that easy, no delays. You only pay 1% interest monthly. With Curacao Advance, you don't fill out forms every time you need funds. In short, submit your claims, get your pay. Eliminate your money problems today. Sign up for Curacao Advance.
Awesome. Awesome, awesome, awesome. So thanks so much, everyone. I think we're going to jump into the panel now. So first of all, I guess we'll go in order from how we see it. And we have Sizwe from Pineapple. Sizwe, thank you for joining us. Please tell us a couple words about yourself.
Oh, hi everyone. Just want to make sure am I audible? Can you see me?
Yeah, we're good. You can see you.
Perfect. 100%. So my name is Sizwe. I'm the CTO here at Pineapple. We're an insurtech based in Johannesburg, South Africa. We're also attempting to redefine and kind of disrupt the insurance industry by introducing a community aspect. We launched in 2018, and now we've been in the market for 4 years. Yes, 4 years, and it's quite an exciting journey. And yeah, we're really excited about just generally the future of insurance in South Africa and generally Africa as a whole. And yeah, we're very passionate about getting inclusion in the financial industry across the board. So yeah, lovely to meet everyone and looking forward to the proceedings of the day.
Awesome, thank you very much. Next, we have Eunice from Bismarck in Kenya. Hi, Eunice, thanks for joining us. Eunice, are you with us? Can you hear me? I think you might be on mute.
Hi, everyone. Sorry, I'm in a car because I had not arrived. But I'm Eunice Maina, the CEO and founder of Bismart. Bismart is an insurtech that is enabling insurance distribution to ensure that there's increase in penetration of insurance. So one of the things that we do is enabling customers to compare insurance not just based on price, but also based on what is not covered and what is covered, because we realize that there are a lot of complaints that they don't get to know what is covered in advance. So we've enabled that. And then the other thing that we do is to design products that are relevant to the African market, because we also realize there's a disconnect between the products that are sold in the market and the way of life that we live, especially as Africans. and hopefully we'll be sharing more about that. So thank you very much.
Awesome. Thank you very much, Eunice. Next, we have Warimu. Warimu, thanks for joining us, and please introduce yourselves from microinsurance in Kenya.
Did I lose you guys?
No, we heard everything. Thank you, Eunice.
Hi, everyone. I'm Warimu. I'm the country manager for microinsurance company in Kenya. Microinsurance is a global end-to-end insurance provider. And what we're looking to do is demystify the way insurance works, from the onboarding process, the product design, as well as all the way to claims payment. So we're addressing a couple of needs in the market. We've been in operations for over 10 years, and we are in different countries. We're in Africa, we're in Asia, we're in America. Yeah, thank you so much, and looking forward to a very engaging discussion today.
Awesome, thank you very much. Yeah, finally we have Henry Mascot from Curacel.
Hello, everyone. Good afternoon, good morning, good evening from wherever you are. My name is Henry Mascot. I'm a co-founder and CEO of Curacel. At Curacel, where our mandate is to help, again, like most people on the panel, drive up, the penetration and number of people who have access to risk protection or risk cover, which is insurance. For us, this is very important because as Africa sort of like develops, then we need to sort of like make sure that people have the right protection they need, not to come out of poverty and not to easily fall back again, which is why we think insurance is important. Our strategy at Curacel is to build infrastructure that enables the stakeholders in insurance, on the insurance industry, starting from Africa, to be more efficient. So we have products that help insurance companies and their partners to sort of like run their business slightly more efficiently. Happy to be on the panel. Look forward to sharing a few of my thoughts. Cheers.
Awesome, thank you so much. So we have a jam-packed panel full of experts from across the continent. So this is quite exciting. I think what would be interesting is just to lay the lay of the land and the context in each kind of geography, right? We know penetration rates in Nigeria are different from that. In West Africa and Nigeria are different from that. In Kenya are different from that. In South Africa, and the markets are quite different. So maybe Sizwe, if you can start off by giving us an example of a more maybe more along the lines market of South Africa and the landscape there.
Absolutely, Lamite. So yes, I mean, South Africa, to my understanding, just from my, well, as you've mentioned, yeah, it's very different to, other geographies across the continent. I know in South Africa, insurance is quite, it's quite a big deal. A lot of people generally are insured, but I think the great divide happens along the financial lines. So those, many people in South Africa, for historical reasons, have been financially excluded from just participating in the economy in general. And this has also kept them out of, things like insurance, etc. But there is quite a high insurance penetration here in South Africa, but there is still a great deal of the market that is still left out due to this financial exclusion. There's also I guess the insured or insurance, the insurance market, should I say, is more targeted towards those who are, I guess, your more young professionals and older, far more the elder generation, as opposed to your younger people, because, and even insurance products as a whole, even the way that they are designed, etc., seem to target your, more more established citizens of society, you know, who, you know, like I said, a bit more on the elder generation, not necessarily younger people. So there's great opportunity to then get access to for younger people into the insurance industry, and you know, to be financially included, you know, in you know, things like insurance, etc. So that's just the general climate of South Africa as a whole. And I know it's very different to other markets across, you know, within the continent and across the diaspora in general.
Fantastic, thank you very much. What about in Kenya? Warimu, and Eunice, what does the market look like? And, you know, so what are some of the strong forces? You know, I think, you know, for example, in Nigeria, brokers are quite strong and significant that dictate, you know, innovation and things that are happening, or, you know, distributing insurance to a younger generation in Kenya.
Okay, yeah. So in Kenya, I mean, I think it happens a lot like most of Africa, whereby the penetration rate is quite low. We haven't hit 3% yet. But Kenya is quite a mature market. So you find, you know, even with Kenya, I think with Nigeria, the biggest hubs for technology. So that's really helping in terms of penetrating the market, the youth and the like. The regulatory environment has also been quite good. You find like IRA has been, you know, in the recent has come to promote insurance uptake with things like Bima Lab, where they, you know, they create mentorships for the insurtechs coming up with the new regulation of setting up, you know, microinsurance companies. But you still find that, you know, the penetration is still very low, because I think similar to what's happening in South Africa, as Sizwe has mentioned, the insurance products essentially that are currently there target a certain demographic. Most importantly, you'd say like the 1%, the people who can afford insurance due to the pricing as well. And the products are quite rigid, so to say. We've had the same products for quite a long time. And sometimes people will not feel like they meet their needs. Essentially, they will not feel like they meet their needs. And, you know, we are in an age of gig workers. Most of the millennials and say the youth are doing a lot of gig work. You know, there's a lot of creatives in the industry, and they have a lot of things that they need met. They need payments to be flexible. They need a lot of things that are yet essentially to be included in the insurance offering. So it's not just about the product. It's about many other things. How is this being brought to these people? What are the channels it's being brought to? Because we're in a modern world now. So I feel like our challenge is basically what most African countries have, what Sizwe has mentioned, and we need to really look into that. Even if we have the enabling environment and technology is big now, we need to really now leverage on these two things to ensure that we are pushing for inclusion for the youth and the millennials as well. So yeah.
Awesome, thank you very much. And then Henry, if you can talk about Nigeria. You know, it's also interesting that, you know, the impacts of COVID and things of that nature, but we can talk about the markets in Nigeria.
Yeah, thank you, Lamide. So again, you know, the sort of like landscape in Nigeria mirrors, you know, mirrors quite similar to, you know, some of the other places in you know, like Kenya. So compared to the continents, obviously, the literature on sort of like the data that's available says that, you know, penetration or insurance coverage is at about 3% on the continent. But that is also like largely skewed by South Africa, like as Sizwe mentioned. So they have quite a lot of penetration. Actually, I think penetration of insurance in South Africa is actually higher than even Europe and America. You know, interestingly enough, I think I'm not quite sure if I'm quoting the right numbers, but I think it's close to 15% or something like that. You know, vis-a-vis like in 15%. In other parts of the world where maybe that number is hovering around like 8%. Nigeria is a very, very low number. Again, depending on, there's too much data. Sometimes you see like 0.1 or some, 0 point something, but less than 1% actually. I think healthcare is like somewhere like 3% or something like that. I think this is with the population, but compared to the GDP, which is most times how penetration is analyzed, which is what's the gross written premiums in the market compared to what the GDP, what's the gross written premium compared to the GDP of the country. And so a lot of, I think even Kenya has a lot more penetration because Kenya has a social health insurance scheme and so on and so forth that, even, reaches people on the healthcare side. So Nigeria, we still have a long way to go because we're a pretty big population. And a lot of people are not insured. So what we've seen, is that the only people who currently have any sort of like type of insurance is maybe people who work in corporate, right? People who work in, banks, companies that give them like maybe health benefits. Obviously, something like auto insurance is, at least third-party insurance is mandatory from a regulatory perspective. So everybody, if you own a car, then you need to get auto insurance by law. But even the problem with that is even, we've also seen that a lot of the policies that are being sold, some of them are also like fake. So you also now have a lot of people who sell all this, 3,000 naira policies, usually somewhere around like maybe $60 or something like that. And so you realize that, no, way less than that, like $3 or something. So you realize that there are a lot of people who the insurance is it's required from a regulatory perspective, but people just get third party they don't understand it yet. So there's still a large gap to sort of like cover from even a perspective of the middle class in Nigeria. So that we have a big and growing middle class in some of the big cities in Lagos, and so there's a huge gap. And for us, we've also seen that is also a lot of people don't. I was having a conversation yesterday. People just don't generally trust insurance companies because you just feel like insurance companies. This is in Nigeria. I feel the insurance companies don't pay claims. They just try to. Their processes are quite. It's ridiculous when you submit your claim. You have to go through hoops and hoops to set it in, and then they spend months before they pay you. But we've also seen like a lot of like young people, which is why this conversation is interesting, who are open to getting some sort of like protection, but for the things they care about, right? They might not care about some of the existing products in the market, but like like devices, just things that they really care about. So sort of like in summary, that opening statement would be that we have massive under penetration in Nigeria, but there are people who are willing to sort of like jump on the insurance thing, but the product needs to be something they care about. And insurance companies, the brand needs to be better sort of like positioned to be like, oh, we're enabling you, we're helping you, we're here for you. We're not just here to like sort of like sell you like snake oil and take your money. Yeah.
Fantastic. Thanks so much, Henry. So as Henry mentioned, the title of this panel really is getting insurance to younger customers with better digital distribution, right? So, we're going to cover three things really. We're going to talk about channel. We're going to talk about, products as Henry's talking about, and we're going to talk about different pricing. But Eunice, maybe if you can start us off with, how you see, channels evolving to get, insurance to this, millennials and Gen Z. Sorry. in Kenya, and how you're providing that.
Okay, thank you so much. Yeah, the Generation Z, it's I would say they are the digital natives. They they're the ones who are born with gadgets. They're the ones who are born with instant. Everything has been instant. And looking at, you'll find a 5-year-old has a YouTube channel, or they have a social media platform, and they're already generating content. So it's a very different generation from my generation. And from where I sit, I think insurance has to adapt to that, because insurance is an old industry. And I don't think it has changed much. When I read about the origin up to where we are, I don't see any changes when it comes to insurance. So the question is, first of all, do they need it? Will they need the insurance? That's the first question. So if they do, how are we going to deliver that insurance to them? Because it has to speak to them. It has to speak to their way of life. Say, for example, if you send an insurance agent to a 23-year-old today, for example, in Kenya, the average age of an agent could be about 35 years old. So you're sending a 35 years old to go and sell insurance to 23 years old, who is always in, with a gadget. Whenever they hear something, they just Google it, or they have many other ways of finding what they are looking for. So it takes rethinking insurance. I'll not say that we have managed it, because yes, we have created a platform whereby they can get real-time quotation. But the question is, are we getting a lot of Generation Z buying insurance? The truth is no. So despite digitizing and being found in the social networks where they are, still we're not finding as, of course, a few of them are buying, but we're not finding as much uptick as we would expect in that generation. So the question is, what is the disconnect? Could it be we're not speaking their language? Could it be that, we're not connecting with them, having emotional connection with them? So those are questions that each and everybody has, we must ask ourselves questions. And I'm really eager to hear, maybe Pineapple has figured it out, or micro insurance company, but I would really want to hear whether we've really figured out, because it's deeper than just placing products to this generation. It's not just waking up and say, hey, you need a last expense insurance. You're telling a 23-year-old that they're going to die, I mean, they just started life, but one thing I noted is the time we're doing gadget insurance, we were doing mobile phone insurance. Again, still, the people who bought the gadget insurance were not that generation, So the question is, what do they really want? Because I personally went to a university and sat with them and asked, okay, do you know what insurance is? And they say, yes, we know. So do you have any form of insurance? No. Why? First, I don't see the need. Okay, what if we gave you a product that would insure your something that you value most? What is this that you value most? They told us a mobile phone and a laptop. Okay, and then we design a product, a mobile phone product. And the uptake that we got is not from that young generation. It's still within people who are in their 30s. So yeah, so I don't know.
Yeah, awesome. So we have, I don't know who wants to jump in, Warimu or Sizwe, I don't know, you guys are doing, yeah, Warimu, awesome, fantastic.
Okay, I actually really get where Eunice is coming from, because that's actually a problem that we currently have, because they've gone to the ground, they've asked what they need, they have created the product and still you find that you're not getting the penetration you need. But I do also feel it's a couple of things, there has been the customer education around what insurance really is and how it works is one of the key things that we also need to look at, because and how even these things work, how do I expect to claim, how do I expect to be paid up, because the current generation is also very impatient in terms of they want to be the center, they need to be the center of the process. So when you're designing the product, they need to be the center. When you're delivering it, they need to be the center. So again, we may not also expect the penetration to just jump off. So how I'd look at it in terms of this is there needs to be one, the product design, which I think that bit has kind of been hacked by a couple of things. Like she's mentioned, there's a phone insurance. I did actually take that phone insurance with you, Eunice, and I liked the process. So there is that, Kara. There's the phone insurance, which is, the product, which is fine, and how it's delivered. I'll give an example. It needs to be delivered in a way that makes sense for them. Like, say, for example, if you're going to offer a domestic package, attach it to things like home internet, and then make sure that it's something they can afford to pay. So you'll say, hey, you just bought home internet, would like to attach domestic insurance. A lot of people don't have it. And it's a very need-based insurance. So people do need insurance, they just don't understand the value. So offer the product, make sure that it's offered, attach it to a transactions or embed it to something or UBI, usage-based. Then at the same time, we also need to look at how you price it, make sure they can pay in bits or so on and so forth. Then there needs to be a lot of constant engagement. It needs to be, you need to constantly, even if it's tips on things, keeping on creating information that helps them understand it. So yeah, it needs to be a myriad of things. And while it can't all be done by the same provider, we can have, things like claims processing done by Curacel and all that data. We can have Bismart be the one that's showing different pricings, because I know Bismart has a platform where you can check what do they need and what not. But essentially, to summarize, you need to embed it to a product they have. You need to give them flexible ways to actually pay these. And then at the same time, you need to make sure your TATs, are very efficient, because there are a lot of providers now. So we are moving away from the price. We're moving away from competition in terms of how much other things are. It's more of what's the scheme, how do you pay these, but more in terms of how are you servicing this product? Are the people happy? Are they happy with your customer service? So it needs to be more of a myriad of things, and then it needs to be very individualized. Because I've seen discussions around things like motor where people say, hey, now I need to pay this rate. I haven't had a claim in a very long time, because this is standard for everyone. So it needs to be individualistic, like usage-based insurance, like motor, where that you're being paid based on how, per mile, or based on a couple of factors, which technology will come in, because you're able to collect data on someone and figure out, hey, I can't give this person motor insurance at 4.5 because they haven't had claims in 5 years. Maybe the next year I should discount it to 3%. So yeah.
Fantastic. Awesome. She's ready. Please jump in.
Yes, absolutely. And those are some valid points that Wairimu raised over there, and also 100% agree with Eunice. Look, even from the Pineapple perspective, that's essentially why we do what we do. We're really trying to get the inclusion happening. We really focused a lot on Gen Z, and your millennials, just trying to get them into the insurance industry. The one thing that we really focus on, that we see works quite effectively from our point of view, I think, just to there's a lot of things which are not even necessarily insurance related that actually can help bring your Gen Z into insurance, just focusing on a lot of other aspects. So for example, we're a mobile app, and That's how we target, you know, our customers. That's how we sell and administer our insurance policies. And this is something that Gen Z really loves, just from, you know, the observation of the data that we collect from the users that we have. We solely focus highly on the user experience. We really leverage technology wherever we can, you know, kind of to move it in line with the platforms that they're currently used to, that they use every day, which is obviously your major social networks. Provide an interface very similar to that, you know, to kind of welcome them into insurance. Also tailor the products as well to, you know, I think it was mentioned earlier that, I think Yunus mentioned, you know, that, you know, Gen Z, they're really interested in taking care of just the things that they want to take care of, things that really mean a lot to them, you know. And traditionally with your insurance products, they're generally bundled with a lot of other, you know, things, with other products that usually they're not generally interested in. So, you know, there's a lot of focus in terms of getting a lot of that around, with, you know, this new, you know, sector of clientele in insurance that is essentially untapped and is really quite difficult to untap. But, you know, I think once tapped in, I think there's a lot that can change for the industry, and not just on the continent, but even globally.
Just to add on what Wairemo and Sizwe have talked about, the other question is profitability. I mean, as an insurance company, yes, you want the Gen Z, and you want to meet them where they are. And one of the things that we observed when we had the mobile phone insurance was, I mean, it was not profitable. So remember that a company is there to make profit. So as much as you reduce the cost, so I think there need to be a lot of investment in this generation. I believe it is eventually, in the long run, is profitable. However, you cannot get into this for short term. You can't look 5 years. It has to be long-term perspective if we are going to change, you know, how they uptake. Remember, when they are 20, they are the ones who will be 30, you know, and then they'll be able to afford more. So you get into this market with the you know, mentality of, this is just we used to call our product a hook product. So we hook them, and once you hook them, you keep upselling them as they upgrade their lifestyle, as they get more capacity to pay. So I think there is a lot of, and I'm happy that Consonants is here. You investors need to stop looking at just, you know, what is making money now, because most of the investors, and I've talked to many of them, you're looking to make profit within, or rather to make 10x in 5 to 7 years. That is not going to happen if you really want the Jay-Z to uptake insurance products. So there need to be somebody to do investment in this particular sector. Otherwise, then we'll just be having conversations, talk about it, go home, sleep, and wake up the following day and do nothing about it.
Fantastic. I'm curious, you know, if you can talk about, maybe here you could, or Eunice, you can talk about some of the challenges to making it the profitability, right? You know, so I think that's like one of the questions. Is it uptake? Is it, you know, people weren't paying? You know, what's? Can you talk more about that?
Sorry, was it my question?
Yeah, sure. Yeah, I was just asking you, you know, in response to what you said, what you mentioned, you know, what, you know, can you talk about some of the issues that you faced, you know, in presenting products to millennials and to younger populations?
Yeah, there are quite a number of them. And so one of them I just said is, yes, the few that you get is that it's not profitable, because you see, you've really discounted on pricing so that they can uptake. And then also there is a bit of fraud, a bit of fraud. I may not say too much, but a bit of it, whereby at that moment we could not be able to prove whether, or rather we had not upgraded our technology to be able to detect fraud. So there are quite a number of challenges, and that's why I said when we need investment in that area, so that for the long term, not for short term, to be able to actually try and test different things that work. As Wairibo said, education is one of them, you know, and the question is, who is investing in educating this generation about insurance? Because if you expect be smart, of course we are doing it, but we don't have the capacity, the capital capacity to do education. You know, it's expensive. It's not easy. You get so, and that's why. And if we go to Consonants and you tell them, you know, you're investing for the next 15 years because we're doing customer education, are you going to do that? You know, so the question is, who is willing to invest in educating, in testing, basically research and development? Because I think there need to be, you know, behavioral, you know, study of the Gen-Z, you know, and not just even Generation Z, because even the those who are in my age, don't ask me how old I am, but but even those who are in my age are not uptaking insurance. So there need to be a behavioral study to understand how do we connect both emotionally and because microinsurance company will say it's pricing. Believe me, I've tested the price issue. You make the product very affordable, but the uptake is still low. So then it means it's not just lowering prices. There's much more than just you know, saying we're getting affordable products. For example, user-based, you know, insurance. I know there is a company in Kenya that has designed a product for those who are riding on the what are they called? The Uber type. Yeah, little cab. And the question is, are they getting the uptake? You know, and why is the uptake still low despite all these tests? So I think it's a whole question of investing in this particular sector so that we can get, you know, exactly what works. Because eventually, if we don't do it, if we ignore this generation, then the whole, I mean, we have ignored a whole market. Yeah.
Fantastic. Yeah, it's great points that you put there. You know, one of the things that we always say to our companies in investing is like, is this a medicine, or is this like a painkiller? You know, trying to make sure that, you know, is vital. You know, and I think, you know, some of those whatever those drivers are might have some of that recipe in it, right? Henry, I'd love to get you in here to talk a little bit more about, you know, what you're doing at Curacel. I mean, I think, you know, there's several, I mean, we have issues with pricing. You know, it's interesting. It would be interesting to hear about like how flexible you've seen people, you know, test pricing or you know, put pricing into the market and stuff like that.
Yes. So again, you know, from also what we've seen. So the thing is, so I think about, you know, the millennials and Gen Z, which is basically what we're trying to, the bucket we're talking about is basically young people, right? Just to, again, you know, the panelists are more direct to consumer companies. So they understand a lot about like the consumer behavior, what's working and what's not working, wherever you see more B2B or B2B2C company. So we don't directly, you know, interface with these consumers. But one thing we've seen, so from some of the things you've mentioned, right? So if you need to create new products, right? From being in the industry, we feel that not enough the products being created. Again, you know, people like Eunice that are on the ground, like going to schools, collecting data. That's fantastic work. But with the way technology has advanced, it's easier to create products that are more tailored to individuals because you actually have their data, right? But again, obviously, the question is, where do this data of all these customers or consumers or young people, who has it, right? And can you create products that are more tailored to them instead of selling, broad sort of like spreading out? You create a standard product and sell the same thing to everybody, right? With technology, it's now possible to create a product for Henry, create a different product for Samson, create a different product for Sizwe, and underwrite it differently based on our history, our user behavior, and so on and so forth, right? So obviously technology plays a large role in being able to get the right price, that those people can buy, because right now when you look at Eunice was talking about, when you look at how insurance is currently sold, most of it through agents, the cost of selling through those agents is still bundled in that insurance plan, right? So, how much insurance are you going to sell to someone? If, for instance, even if it's micro insurance is obviously super interesting these days, because looking at Africa where, disposable income isn't that large, then you're looking at, okay, can we create products that are micro, that's not expensive, so the premium is cheap, people can afford, or not cheap, but people can afford it because it's a little bit smaller, and then maybe they can pay in bits as well. You can't distribute that through an agent, right? Because it's expensive. It's the cost of how much you're going to pay one person to sell a $10 insurance plan or something, or so technology plays a large role in a few things. I've mentioned a few things, from pricing, like in terms of figuring out how do you price this for this particular person, and also distribution, right? How do you get it to them, right? At a very affordable cost. And then obviously in sort of like where we started out, also in fraud and claims, like Eunice was talking about, if some of the biggest issues they're having in the business is that, you're not having the right technology to be able to determine, okay, that something happened to the phone, is it the same phone? Being able to collect that data, okay, did somebody smash another phone or pick up another phone and just claim for it? So just having the right technology to sort of determine that it isn't a fraudulent transaction. So generally, when I think about, just add a few things. So my first was around the large. You can't sort of get insurance to these people without investing heavily in technology. You can't. It's because from creating the products to distributing it. I'm super excited about what something where you talked about earlier, which is embedding it as well. Somehow insurance generally across the world is broken, but there are companies that are starting to fix it in terms of how it's acquired. Because right now, what typically happens is, you buy something, right, and you need to insure it. You typically have to go somewhere else and to insure it. But if it was bundled together, and when you're getting that device, or when you're getting that car, when you're getting whatever, right, it's embedded. Right. And I'm seeing super exciting models or being talked about in other places in the world where you sell somebody life insurance when they're buying a mortgage or when they're buying a house. And then with that, you give them better pricing around the mortgage, because you say, if you get this life insurance, it means you're going to be around, blah, 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 you model it in. So it's sort of like figuring out where do you get, people to buy insurance based on what they're already doing, right? Not going out of their way. Because if somebody works into my office right now and says, hey, man, get this life insurance, there's no trigger, right? Why would I at that particular point, right? So we need to be able to start looking at what are the touch points. Technology can help because a lot of all these young people are on digital platforms, they're on neobanks, they're on e-commerce, they're on social media. So it's figuring out how do you use technology to collect this data, price better for that particular individual, and then your processes have to be automated as an insurance company, right? If you're going to if you're going to try to be profitable, if you're going to try to keep the cost of administration, the cost of distribution low, then you need to invest heavily in making sure that when a claim comes in, it's automated. You don't need to have 10 people in that process, and those 10 people earn salaries every month. It's all part of the cost. So that's sort of like my 2 cents on sort of like the role of technology in getting insurance to these young people and managing it easily. Cheers.
Fantastic, thank you. Yeah, so we know we talked a bunch about getting into insurance to the young people. So basically, we're saying it needs to be embedded and as close to them in their buying transaction as possible, so that it's kind of a seamless experience for the user. I think that's quite fascinating and very interesting. It would be interesting if we could talk a little bit, dive deeper into, and then I'm sure obviously we're talking about millennials, so there's got to be a lot of social components to that as well. And I think Pineapple is doing a lot of that stuff, so that's cool. So it would also be interesting to talk about like product evolution. I think we talked a little bit about it, but it'd be interesting to talk, like dive deep into like okay, how, like what products do these guys like? Okay, we need to educate them. We need to put products closer to what they buy, and then what are these products going to be to drive their adoption. I think obviously motor insurance has been one that's seen a lot of kind of a tech kind of involvement, but it would just be interesting to hear about how you guys think about products and the flexibility in products. I think we can go with Henry on that, or Cesar, sorry, go ahead.
Okay, cool, sure, man. I think so. In terms of products, for targeting the Gen Z or the earlier millennial, I think what we invest in quite a lot is just getting that user feedback and finding out really from the people themselves, what is it that's important to them and what is it that they actually want, what would they like to see. Because I think, as was obviously meant, kind of concluded across the panel, just from experience, Gen Z generally cares for things that are close to them, that matter to them, and they want things instantly. They're a very different breed, as opposed to the likes of ourselves and above, and they generally, life is different and we don't understand that as much. And I think from our perspective, our user experience, etc., is something that we really pride ourselves on, and we really invest heavily in getting research and information back from our customers. So that's what really informs the direction of the new products that we come up with. Obviously, those then are subject to discussions with underwriters in terms of, as Yunus mentioned, things like profitability, etc., etc. And you'll find a lot of the traditional insurance companies are very reluctant to, kind of introduce something new, because, I mean, it makes sense. Like what they have right now works. Why would you want to try and fix something that's not broken? But then obviously, having said that, you're then leaving a whole, generation of people just, kind of untapped into, which is obviously where we're trying to get into, really hard. And yeah, like I said, we invest heavily in just finding out what is it that the customer wants. So it's nothing else informs that direction, new products than what we're mentioning over there. So Eunice just had her hand up.
Yeah, yeah, I like what you just said. Yeah, you just have to, and a random thought came when you're speaking. Said, could it be we are trying to innovate for people that we don't understand? How about putting them in a room and ask them to design for themselves the products that speak to themselves? Just a random thought. But also there's something that I've seen work, especially for us at Be Smart. This year, in January, we launched a product. We call it Afia Smart. Basically, it's designed around our way of life in Kenya, and maybe it's the same with Nigeria and South Africa. I don't know how you guys work, but if I got sick today, what I do, I create a WhatsApp group. And then I don't ask you, I don't request you. It's not a request, okay? It's the fact that you're in that group, you contribute for my bill. or if I lost a loved one, say my cousin or my brother. So I put you in that group, and the purpose of you being in that group is not just to talk, is to actually contribute money. And so we asked, how can we design a product around that behavior? And we came up with a health cover, a health product, whereby people come together. They're not, I know we broke one rule of insurance, the insurable interest rule, because we realized insurable interest means something different for us as Kenyans than what it means for Europeans. Because in Europe, it is me, my spouse, and my kids. That is what family is. But in Kenya, my family is me, my spouse, my kids, my mother, my father, my cousins, it's big. And you see, I'm not requested. It's my responsibility when my brother's child gets sick that I come in and contribute. It's not a question. It's obvious. And so we design a product whereby, okay, fine. And for us, we targeted the middle class because they're the ones who are hardly hit when it comes to those bills for their relatives. And what we've also seen is that the millennials are also coming together as friends and saying, hey, and what attracts them most is the maternity cover. And so they come together, like you'll find four young people come together, and they changa, or rather here in Kenya, we call it changa. Changa is crowdfunding. In other places, they think crowdfunding is a new concept. Here, it's what we have always done. So you basically crowdfund for premium. So that has reduced the cost of premium for health cover, because then you just need to get together 4 of you or 3 of you or 5 of you or 10 of you and each contribute, and then you have a shared cover. So yes, there's some things that have worked, but also it is being championed not just by the millennials. It's also being championed by my generation, because the parents of these millennials understand their need for insurance, and they tell them, there's this cover, I can even contribute for you. You get. So as Sizwe said, let's keep testing what works, and then we can now scale what works.
I may just jump in there. Some very valuable things that Eunice you've mentioned. I will say that it's very similar in South Africa. In fact, pretty much the same. The concept of looking out for your family is not just your immediate family; it's everyone. I'd like to think it's an African thing, and so it's really good to hear that. And that's essentially what the pineapple model was, kind of based on. What we have in South Africa, we call them stokvels. And essentially that's when people come together and put money together to, kind of take care of each other and save money together. And, and it's a very common thing. I think it's an over R1 billion industry here in South Africa, because it's inherently in our culture. And I think, that's also essentially how insurance started, even, outside of Africa. So that's the one thing that we're definitely trying to bring in. And I think that's one of the beautiful things of insurance. So, yeah.
Fantastic. And what kind of products, I guess, what kind of insurance, or your communities, I guess, buying or using, or you're offering to your community?
Taking that questions for me.
Yeah.
Yeah. So look, so the one thing that we've introduced now is the item by item insurance, where you can just insure individual items that matter to you. We also have car insurance as well for your vehicle, and we're still doing some research in terms of rolling out further products. But also we're also trying to innovate our current products to suit what the market wants. But like I said, there is also that facility of, well, essentially that is how the pineapple model works, which is through the community-based thing, which is where you can essentially create groups or make connections with people and essentially create your own family. And you can spread risk between each other. You know, from in terms of the pineapple model, we only take a fixed fee, you know, and everything else goes back to the community. And that's essentially what we are aiming to introduce back into the industry. So yeah.
Fantastic. Thank you very much. So I think you know, the next question we're gonna jump into is due to timing, we're just gonna jump into pricing, and maybe if people can talk about you know, really what's, you know, underpin. There are a lot of technologies and there's a lot of data obviously that underpins the ability to, you know, provide pricing. So maybe you can talk a little bit about you know, Warimu, maybe if you can talk a bit how you think about offering you know, products that are affordable to, you know, Gen Z and millennials.
Yeah, thank you. So in terms of offering and pricing products that are essential to millennials, there are a couple of things we have had, you know, to look into when we're doing that pricing. You find that the pricing for, you know, traditional products is quite high, and not at any fault of the insurer per se. It's because there are a couple of things that are included in the pricing. One is like management expenses, because, you know, like Henry was saying, you have people in underwriting, you have people in claims, you have the agents for selling, which essentially will, you know, put the pricing at a very high level. You know, there's a lot of paperwork. So to come down to an affordable pricing, because like in Kenya, for example, you'll find 85% of the people who, you know, the working population is in the informal sector. So if I go to them and I offer them a product and tell them you have to pay around 30,000 Kenya shillings, which is say 300 USD, I'm still using 100 shillings conversion. You know, it's not going to work for them. So you have to look at a couple of things when you're coming down to providing a pricing that works. One is leveraging on technology, and also in terms of partnerships. So for example, if I design today a certain product and I want it to be low priced, first of all, I need to make sure there's no paperwork, which is something microinsurance has been doing for a minute. So through the partnerships we have, through B2B partnerships, you're able to collect data from the business partner through the data they already collect, you know, because you need minimal information at the beginning of onboarding. So if a customer subscribes to the insurance, you already have the info because the partner already has that info. So you've done away with the, you know, with the documentation essentially. So you've done away with that cost. Secondly, you need to, you know, focus on leveraging on the distribution channels that partner has. Because right now, a lot of companies already have distribution channels, if it's app or USSD and the likes. So you can plug into these distributions to just get the insurance to the Gen Z and the likes. So for example, you can plug into Uber's, you know, interface where insurance can be added, or Hava, you know, all these people. You can plug into that just to get the, you know, the insurance to the person. That cuts out, again, that completely cuts out on the costs, you know, for getting to that. And then as well, you know, if you go to a company that has a huge market and you're able to embed these, again, you know, you already have now the numbers, so you can reduce the pricing as well. So what we've done is, you know, combine all these factors together, you know, to be able to reach the customer and, you know, also offer these insurance products to them at a very minimized pricing. Another thing we've also done is also, you know, like usage-based insurance or insurance on the go, where we allow them to pay, you know, like in bits. You don't have to ask someone that, I want you to take this insurance, but I need all the premium upfront. We have found ways to, you know, to get around that. I know IPF has been there for a minute, that is premium financing, but it hasn't always really worked. So one of the ways we've done it for us is people can pay in bits, and in case you claim, you know, like an annual cover 3 months down the line, you can prorate your benefit. You know, it doesn't mean you completely lock out people, but you're offering them, you know, these products that you've designed for them after, you know, having it, and at the same time, you're giving them a pricing that works. So I'm not sure if I've left out anything, but that's the key thing, because you have to remember how much these people make and the fact that their income does not always come at a go. It's just salaried and, you know, people in formal employment who have end of month income and whatnot. Yeah, so the pricing has to be very, very centered around them.
Fantastic.
If I can also jump in there, right? Just something, just something Warimu said. So there's an example. So as I was listening to some expert in some other space, so an example, a very good, again, this is with the advent, so embedded financial services is a big thing now across the world. And it's, you know, this is not just in insurance, but even like in credit, you know, because you have all these big platforms that have massive customer data, you are able to even give people like a different interest rates based on like their user behavior and like experience. So this is what I was talking about earlier. Can insurance companies start looking at models where, again, there are companies doing, you know, already like sort of like providing the technology, and at Curacel as well, we're also working on a product that helps insurance companies that are already working with, you know, look at better ways of like embedding with existing services. But can you look at, you know, big consumer platforms? But to be able to do this effectively, there's a technology or there's a data expertise you need to have. Unfortunately, most of these insurance companies don't have this, right? So, you know, when you plug in, because now you're looking at, it's really difficult, but there's a big, massive opportunity here. Because typically how are products created, right? So actuaries, like, you know, you create a product based on your regular channels, right? So you know that, okay, we're gonna vend through this agent, we're gonna vend through this broker, right? You modeling their 10%, you modeling their 20% in there, you know, and then you create that product, and then obviously you model an administration fee. But it takes a very different mindset, right? If you know that, okay, I'm distributing through, for this particular type of product, I'm distributing you through, you know, like Eunice said earlier, through like boats is a device. It's some sort of like personal injury, and it's modeled together, you know, when you book that Uber ride, or when you get on a, you know, so when you think about it's different, right? And then if right now you have customer, you know, you're working with Bolt, you're working with Uber, and they're happy. Again, you know, it's incentive. What is incentive for Bolt? Is it new revenue or whatever? And they're able to give you access to their customer data. Then you can do really interesting things with those customers. Again, we've gotten to a place. The reason platforms like Facebook, Google, Apple are so successful is because like they have your data. If I leave Apple, let me just talk about Google and Facebook, and they have so much of your data that like they know how to monetize you. They know what ads to show you. They know what to pop up on your timeline to make you keep coming back, right? So they figured out how to, like, it's user behavior, right? So this is a sort of thing insurance companies sort of like the expertise they need to tap into, right? So when you get into these platforms, you get into where are the users right now? They are in banking, they're in banking apps, they have apps, you have their transaction data there, they're buying stuff from e-commerce. At least some of you can't get their data from social media, so that one might not be, but like from like banks, you know, maybe telcos, e-commerce, some of that data is there. And for some of them, you're already seeing buying patterns. So can product creation be, you know, how would I say, real time, in the sense that you use the data you have to create it? But again, this is impossible without technology, right? And again, I don't know, it might be like, I'm like, you're probably just talking science fiction. Maybe if you're talking to some of these insurance companies that, again, don't understand technology, right? So if you introduce, some of these guys are maybe in their 50s, in their 60s, and they don't understand technology, right? So it's really difficult. But I wonder, right, for some of us in the panel, what we think about this. But if the way we create insurance, we start looking at where's the data, right? Who has the data? Can we create, can the policy not be 10 $10 for Warimu and $10 for Henry? Can it be based on like Henry's behavior on, you know, one banking app, the number of transactions he does, what is he buying? And so I wonder, right? But I'm super excited about like the opportunity of using technology to tap into the data of some of his ecosystem and some of his platforms, and I'm making insurance, you know, alive, you know, not like something that you created products 10 years ago, you created products, you know, 2 years ago, 5 years ago, and it's exactly the same thing. And these products were created for a totally different channel. It should be that if you're selling me insurance on one platform, it should probably be different if I'm on another platform based on the type of data that you have on me and so on and so forth.
Okay, fantastic. Thanks so much. You know, we're gonna jump to Q&A now because I think we have a bunch of questions. And I'd like to, I think it'll be great to just, you know, hear directly from the you know, audience. So there's an interesting question here, which is, you know, which is this kind of concept of having, you know, an all-in-one play. So basically, for example, you said, you know, I think we need to start looking at creating micro insurance products that embed most, if not all, products in one, give them flexible payment options that, you know, may have customer enjoy, you know, more, that the customer may enjoy more than one product. You know, so for example, you can have phone insurance, personal, and savings plan all together. So Warimu, I wonder if you have any comments on that, and you know, what's your opinion on that?
Yeah, I do think that's actually a really great idea. That's something we're working on within the organization, where we're trying to create a process where people can buy different types of insurance within one marketplace, and you can always move, you know, your payment, you know, affordable payment to different things. So it's more of like building coverages. So it's like, how can I put it? It's like you can, you know, maybe benefits attached to your payment, say the way you transact, maybe you're going to the supermarket and, you know, there's some change that's left over. And then you can just add it to any insurance coverage. You can say, I want a life insurance of these, travel insurance of these, medical of these, and the money can just, you know, be going, if it hits that limit, can go to something else, or you can say, I want to move it to this. So I do believe that, you know, that's something that needs to be in the future, like a super, you know, as the person is saying. Yeah. So because I know that happens a lot in investments. It's like the way you put, you know, your money into different portfolios. So you can actually do the same thing for insurance, because you find, even for myself, for example, I want insurance for so many things. I want medical, I want education, and if I was able to just do it all, or have it all in one platform, and then just decide how I want it, and so on and so forth, that can, in my opinion, or in terms of what I've seen, that's something that would really work for people, instead of having different things work for different aspects, or different insurances being positioned in different ways. So yeah, that works. But then again, there's also the need to also look at, other than the super app, what especially the certain customer wants, because it can get confusing for some people. So there needs to be a balance. Like what Henry was saying, it's easier to just look at data and offer these things based on, you know, what data you've collected about the specific person. Because if insurance, I'm using, say, example, like I'm about to take a flight or something, and I'm being asked to buy something like property, you know, that's what's been showing to me. It's a bit trickier in terms of reach than opposed to being shown by travel insurance when you're taking a flight, or life insurance. You get what I mean? So those two things can work together. It's about looking at how exactly you place them. But yeah, I hope I've answered the question correctly. If not, I'm happy to clarify. Okay.
Can I jump in also on that?
Please do.
Yeah, I like that idea of super app. And actually, the most ideal, I've been raised in the village, and where I come from, we used to, we never used to take cows to the river, but we used to give them water with a basin. And when it is cold, the cows did not like water. So what we would do, we would put salt. There's some special salt that cows really love to just lick. So you'd put that block of salt at the bottom of the basin. And so because the cow wants to lick the salt, they have to drink the water to actually get the salt. I think that would be the most ideal for insurance penetration, whereby you find out, okay, because the insurance in this case is like the water that the cow doesn't want to take because it is cold, or maybe it's tasteless to the cow. And forgive me for using the word cow. I'm not calling people cows. I'm giving a scenario. So the most ideal would be where you actually embed insurance on what people like to buy. For example, if they like to going for movies, embed it on the movie ticket. If, like in Kenya, people like to borrow a lot. So embed it on loans so that then as they take what they love, they eventually take what they don't like to have, which is insurance. However, the challenge is the person giving loans does not want to increase the cost of their loan. So are they going to agree to embed? The person who is selling the clothes, the fashion, the clothes that you want to embed on, do they want to increase the cost of their dresses? Now remember, they can't use the insurance as the way to say they have added value to the dress, because insurance is not that thing that people want to buy. So you cannot tell them that because you've embedded insurance on your dresses, you'll have more sales. You understand? So the question is, because that would be the perfect, super app whereby as I go to shop for my unga, I get insurance. Not because I really thought about it, because it was available. But the unga person doesn't want me to embed insurance to add that small cost on the unga, because then it makes their unga not competitive. So the question is, how do we, resolve? That's a riddle that we need to crack.
Yeah, and I want to come in there, Eunice, because I think we have like 3 distribution models we found that works. Like you said, most people don't buy this insurance, and the end person doesn't need to, the person who's giving the insurance or the partner doesn't want to add to their cost. And we found that one has to give, one has to give. So we found what we've done a lot in the past is first, you need people to first experience the insurance, before you tell them to spend their money, because people don't like spending their money on these things. So we like to start off with a period where we give insurance. We just tell the partner, if we're working with them, let's work together to offer this insurance for free for a bit, just that people can have an experience about the insurance. Then from there, you can upsell. You understand what I mean? Like, we found that in a way really works, because Eunice has really raised a very great point on that. Because if you offer it first as a loyalty, and then people experience it, it's much easier to get the people to actually pay for an insurance coverage than telling them, just buy this insurance, it works for you. Because again, it comes down to people need to feel the experience of it. And at the same time, people also need to, there needs to be some trust, because for the longest time, the biggest issue is also trust. They don't feel like, I remember I was in an Uber and, we were discussing COVID and the effects of all that with the driver. And he was telling me, oh no, I can't take insurance because I'm going to pay money, and then what are the chances I'll claim for it? And then I'm seeing insurance companies building all these fancy buildings all over, and I'm wondering, this is what they're using my money for. So they need to first feel like they've experienced the insurance, they've benefited from it before they spend at the same time, and then you just add education for it. It's still a riddle because, we've also done the embedding, yeah, it's still a riddle, but most of the time it comes down mostly to experience, the customer experience.
Wairemo, I want to not really disagree, especially on the freemium products, because yes, you see, for example, when I was in a certain company, we actually did a freemium product, and the hope was once they experience, they will buy automatically.
Yeah.
But that, okay,
Didn't work.
when you get like 10% conversion, that means you have not really been very successful, because you see, you're giving somebody something. First, they don't know, because
Yeah.
it is you buy airtime and you get a free cover. So is this product you're giving for free something that I really care about? Because if I don't care about it, it doesn't matter whether you give it for free. It's actually even better if you make me believe that it's a good product that I need, instead of giving it for free. However, let's keep testing, but I'm very skeptical about the freemium model, because they, converting them from free to paid, and I'm looking at a Kenyan perspective. I didn't ask for it, so
just giving me, and because it's free, I'll take it. It's a Kenyan thing. Yeah,
and
but you're
even
very
then,
right.
they may not even remember that they have it.
Yeah, you're very right. And I agree. It needs the product design. I think it comes down to a couple of factors. You can't just go with one and expect that's what works. You have to mix a couple of things. You have to mix the product design. You have to make sure the processes are very seamless. The claims payouts are happening. You need to put information out there. You need to show people, hey, this person claimed and got paid. So it needs to be a couple of factors. It needs to be a couple of factors at the end of the day. It doesn't mean we'll get results year one. Like you mentioned, you remember when you're talking about the fact that there needs to be capital invested, because you're looking at more than 3 years from now. It's a process, but we really need to mix a couple of factors when it comes down to it to get to that end goal 5 years from now or so and so. But yeah, at the same time, there needs to be a lot of customer engagement, because you don't want to offer products for free that don't work or no one is interested in. You need to leverage on technology to collect premium month too. After you have, gotten someone to come in for free, the next month they've forgotten about it. There needs to be a lot of engagement as well. But I think it again comes down to what you're saying. We need to have room to test these things. It needs to be an iterative process. You can't just move on. You can't just stop it and say, hey, now we. So comes down to the fact that we also need a lot of capital. So yeah.
And that puts pressure on Lamide and the team, because
to give the capital.
I mean, if you really want to invest in insurance penetration, then you have to be in it for the long haul, not for a short term. And 3 years is very short, Wairimu, because I've been in this smart for 4 years, and we're still trying what works. So 3 years is a very short time.
I agree.
We need to think 15 years.
We've been there for 10 years and we're still, but we don't have, we can't say we have a bad uptake, but we have to say that I think all the points you raised, you'll come with a perfect product, you'll offer it. It's what people have said they want, but then in Kenyan language, kwa ground between different. The ground is not as I seem on paper. So I do agree. There needs to be the bigger picture, longer range kind of looking at things. Yeah.
Fantastic. We have another question here about, the role of reinsurers. I think Wairimu, you mentioned it a little bit, but, obviously, reinsurers play a big role in pricing and making things affordable for, insurance period. So, maybe you guys can talk about the role of reinsurers in your markets. Maybe, sorry, I guess Eunice, you can take that. Or I think.
Okay, you want me to take that? Honestly, okay, it still narrows down to the same. It doesn't matter, whether there's a reinsurance. The thing is, even if you got the perfect pricing, how do you make somebody, a young person who has just begun life, to see the need for insurance? Because for me, pricing, through the few experiments I've done, I do not think pricing is the issue. Because you see, when you say you're going to give low prices, and then you have to compromise the benefits. Say if you're talking about health insurance, so you're reducing the cost of the premium, but then you limit the service providers, in this case, the hospitals, I can access. I am a young person who has been raised in the, the upper, let's call them the urban area, meaning I have experienced a certain life with my parents, going to certain hospitals, and now because you want me to afford insurance, you reduce the price and then you take away that benefit from me. You still haven't helped me because I'll not buy. It's still not meeting my needs. So I think it's a question of giving what people need, price it accordingly, but then you can figure out maybe the payment plan or how I pay, but not because you can't say you're going to have a very low priced insurance and it is giving high benefits. I don't think that can happen because you need to make profits. But maybe if you broke it down into daily payments and you make it very easy that you're not asking me for the money is deducted somewhere automatically where I get my income, then you have helped. So the question of pricing, reinsurance, for me, it doesn't arise. Is the question of how can we give the customer what they need at the way they want it.
Fantastic, fantastic, fantastic.
So if I were to add a little bit, so again, what's the role of reinsurance? So obviously, for reinsurance companies, obviously these guys have to cover some of the risks for the insurance companies. And again, one thing from being in the space for a little bit, one thing I've also realized is sometimes it's not just the fault of the insurance companies, the inability to innovate and be willing to try new models. Is also because again, some of their reinsurers are just also not unwilling, again, don't understand some of these new models. So if you were looking to redesign how certain parts of insurance would work, you'd obviously have to take into cognizance the reinsurer's ability or willingness to cover the risk for that insurance company. So to the person who asked the question, yeah, obviously the reinsurers also play a large role in being able to drive the sort of like innovations that we're looking at, because if they're unwilling to reinsure that book, if an insurance company like Pineapple, for instance, decides to try a very different sort of like model, the reinsurer might be unwilling to be able to sort of like partner with them to do that. So so in this conversation around, because I guess the conversation we're also having is that, again, insurance companies need to do certain things differently. It's some sort of like education. We've said a few things like Warimo, ability, experimenting with a lot of things, being open-minded and trying things, getting data, refreshing, doing sort of like experiments every few months, every few years. I think the reinsurer plays a large part in this process as well.
Thank you. And then finally, like our last question, why we're here today, we think that, InsurTech and, what everyone is doing on this panel, microinsurance, Bismart, helping the infrastructure and the claims is really important in terms of the financial inclusion of, millennials, right? So, we have a poll. We wanted to, get a response from the audience and ask you guys while we go through our panelists and get their feedback on, really the importance of, what they're doing in the broader scheme of financial inclusion. So, so I'm just gonna launch the poll now, and then, so you should be able to see it. So please take your time and go ahead and vote. Thank you. So we have about 40% of the votes in. We're going to wait until we can get a little bit more. Fantastic, fantastic. They're coming in still. This also lets us know who's still with us. So we're taking notes.
Thinkers, as we wait for that, I want to answer a question that I've seen Damola ask, whether microinsurance, having a reinsurance has sort of tackled this. So yes. So one of the reasons we are doing a whole end-to-end is to be able to have oversight over what's happening from the very end, and to reduce limitations on products that can actually be offered. So we do a myriad of products. Like one of the products we find reinsurance doesn't like picking up is like phone insurance, phone screen insurance. So we're able to do a variety of products because we have our own reinsurance arm now. So yes, we've been able. It doesn't mean we can just do anything, we can wild out, but at least we get to have more room to explore other products.
Awesome. Thank you very much. I'm going to end the poll now. All right. So here are the results. Can you guys see? So we have about 57% either agree or strongly agree. While we have, so this is quite interesting. We have 28 that disagree. So I would love to hear their thoughts, if you could. But that's it. I think the ayes have won it. I think the strong agree have won it in either case. But thank you guys for this very enlightening panel. Thanks for sharing your time. Before we close out, we'd like to get kind of like last words. I know you can talk a little bit about your company and what's where we can follow you and get any interesting feedback. Warimu, maybe please can you start?
Yeah. So essentially, I had mentioned microinsurance company. What we are trying to do is offer insurance to the mass market through an end-to-end, which means we have insurance companies. In Kenya, we are setting up a microinsurance company which can do underwriting and all that. We should go live around maybe January. We have our insurance, we have an AI company. So we're trying to have a whole end-to-end process for this. We are in different markets. We're in Africa, we're in Asia, we are in the US and all that. You can reach us on LinkedIn. We are the Micro Insurance Company on LinkedIn. If you'd like to reach out to me directly via email, it's wairimo.njoki, as it's showing on my interface at microinsurance.com. Yeah, so that's basically about me. I'm happy to engage. I'm happy to look into partnerships. Yeah, thank you.
Thank you. Eunice, please take it from us.
Yeah, yes, I'd shared that BSmart is an insurtech in Kenya, and we call ourselves the supermarket, the online supermarket of insurance. And we, apart from enabling customers to compare price, benefits, and exclusions, basically we provide the information that customers complain they don't get from when they talk to agents on one platform, and they can compare from right now up to 15 insurance companies on one single platform. But we also design products that are relevant, we think are relevant to our market. The way in a supermarket, you'll find they have all products for different companies, but then they have some that they package for that particular supermarket. That's the whole model we have adopted at BSmart, so that then we enable the insurance penetration. And somebody mentioned about, tactical embedding of insurance. One of the things that we realize is that the SMEs, the small businesses, entrepreneurs, really are not buying insurances for their businesses. And so we organized, or rather we founded an event, we call it Sales Festival, whereby entrepreneurs come together in a room to talk about sales, and they network and they sell. And of course, we also talk about insurance in those forums. So if you want to reach us on LinkedIn, is BSmart Insurance. Facebook, again, is BSmart Insurance. Twitter is at BSmart KE. If you want to reach me, I'm also an author of the book, Sell Me This Pen. This way I've shared my journey as an insurance agent, the challenges that I have seen in the industry, and the opportunities that I see in the insurance distribution. And some of those things that I've recommended in the book are what we are doing at BSmart. So you can get yourself a copy on Amazon, Sell Me This Pen, or you can reach me at Eunice Minor. Sorry, on Twitter is at Eunice W. Minor. On LinkedIn is Eunice Minor. On Facebook, again, is Eunice Minor.
Fantastic. Thank you. And, so just a quick plug here before you close for us. Yeah. So, Consonants, again, we are, investment firm. We've also invested in this embedded insurance space that you guys have talked about throughout the conversation, in a company called Lami in Kenya. So please check them out, Lami World. And then, that's it from Consonants. Henry, please.
All right, cool. Thank you, everyone. I'm happy to have been shared a few of my thoughts, and I've learned a few things as well. So again, Curacel for us, we believe our part is to enable some of the stakeholders, especially the insurance companies, by providing them the right infrastructure. Our website is curacel.ai or curacel.co. Our socials are pretty much, I think, Curacel AI everywhere on Twitter, Instagram, and so on and so forth. So please follow up. Feel free to reach out on LinkedIn to continue the conversation. Thank you very much. Have a fantastic rest of the weekend.
Awesome. Thank you guys so much for joining, and we'll close it out from here. Thank you very much.
Remember that time you submitted claims to your HMOs and you waited endlessly for them to pay you? We are sure you remember, and this happens almost every month. While you're not being paid as quickly as you'd want for your submitted claims, your expenses, overhead, and other costs keep piling up. We feel your pain, and as your partners, we have found a way to alleviate some of these problems for you. Welcome to Curacao Advance, the faster, simpler, more secure way to access funding for your healthcare business. Signing up is easy as ABC. Step 1, visit curacel.co/advance. Step 2, fill the Curacao Advance form with the information required and submit it. We will securely store your details for when you request an advance. Step 3, request your advance. This is the fun part. Submit your claims and access up to 70% of the amount of the claim submitted in the month. And in 24 hours, you will receive the money in your registered bank account. It's that easy, no delays. You only pay 1% interest monthly. With Curacao Advance, you don't fill out forms every time you need funds. In short, submit your claims, get your pay. Eliminate your money problems today. Sign up for Curacao Advance.
All right. Cheers. Thanks for joining.
Thank you.
Thanks for everyone that stuck around. Bye.
Bye.